Hi, guys, and welcome to today's episode where we are going to be going over breakout and retest strategy. Now, this is going to be based on the previous episodes, which would be your support and resistance, and how to trade support and resistance zones. So, if you have not seen them, you will not understand the concepts, what are going on in here. So, please go back and have a look at them. So, the first thing that we are going to obviously do is check out an area of consolidation, right? It's a horizontal movement, exactly what we are talking about in the first episode. We draw our support, which is roughly around here, and then we draw our resistance up here. Now, remember, guys, the resistance and the support lines, how do we figure them out? Well, we look at double, triple bottoms, quadruple bottoms, double tops, triple tops, so on and so forth. Well, the candlesticks are wicking through or they're closing on the line. The place where that occurs the most. We can see it being here. And remember, crypto is not a game of perfection. So this line gets, well, this wick, I should say, should get super close to this line. So if it is really close to that line, then it's something that we should actually consider as being a retest in this case, because we're not going to have this line in the perfect position. It's never going to happen. So if it is, within that's not even a centimeter, right? It's half a centimeter. Like, that's something that I would consider a retest. This one, still fairly close, and I'd also do that. But it's like, for example, this wick here to this line, no. So if you ever need to come back and have a look at what I think is a close, to close proximity to something being perfect, then definitely have a look. Take a screenshot, write some notes down, because this is a prime example. So what we are looking for is initially the breakout. Just like this breakout here. Wicks are not considered a breakout. Okay? Wicks are not considered a breakout. The candlestick has to close above either the resistance or the support. But what you can see here is, even though it's technically a breakout, it falls straight back in. So how do we make sure that when we are hopping into trades, we're not just getting basically phased out? Well, it's quite simple. Instead of doing what I guess happens here, which is this, it breaks out and then it comes straight back in, which we want to avoid. Here's what we're doing. We're coming up, we are retesting on that line, and we are shooting off. This does something that's really cool, right? We know this line here is really strong because one area, two areas, three, four, basically five areas this line has been tested, and the market keeps on getting pushed back in. Quite clearly, it's our resistance line. But if the market does break through, and then it bounces on such a strong line, then this resistance might have actually turned into support. Think about it. It's really strong at keeping the market here underneath it. So it should be really strong when the market hits it, right? That's what roofs are for. It's to help protect things coming from like the outside. Like, you don't want a tree to like hit your roof, obviously, but sticks, stones, all that jazz, that's going to protect it. It's going to protect it. So the roof can also flip around. That resistance can flip around and be that support. So that's what we're looking for, guys. So if we go ahead and we see what happens here, look at this perfect, this literally perfect, if I zoom in. Yeah, it is. It's perfect. Even though I say crypto's not a game of perfection, this line might not be in the right spot, guys. So there was a perfect retouch right here. It comes down, hits the line, and then look at what we got. An absolutely massive push to the upside. So what would I do in this scenario? Well, obviously we're going long. And then I would put my stop loss. This is an absolutely huge candlestick. So those of you who are risk adverse and you've watched the other ones, you'll always know that I put it at the bottom of the candlestick. Those of you that are like a bit more risk, remember, we always go halfway up the candlestick. Those are the two rules that I usually go by. And let's say we're usually going for a 1-to-1, right? A 1-to-1 is going to be roughly here. Because that's the minimum we're going to go for. Shoots up. We hit that within 15 minutes. But again, what do we look for in terms of exit signals, guys? Well, we are looking for how should I put this? We're looking for engulfing moves, or we are also looking for consolidation to occur again. And I'll show you what that looks like. But obviously the market is going up. It's pushing, it's pushing, it's pushing, it's pushing. But here we have our first signs of the market slowing down. And although it starts to go up and it continues to go up, we're still not getting out yet. It's not time. And as you can see, there's something up here. So you probably can tell that this is where we're going to hop out of. But here, this is consolidation, guys, where the market is now moving horizontally. So that's when you want to start to get out of the market, where you say to yourselves, hey, look, the market's not actually going up. It's not going down anymore. This big move that I've been in with a lot of momentum, obviously the momentum has ended. So we do not want to get involved in that. We do not want to get involved. And I believe it still does go up. But then you got your secondary exit indicator right here. Big engulfing move. It takes out 1, 2, 3, 4 candlesticks in one 15-minute spot. So this could turn at any moment, right? That's when we want to hop out of the market, which would have given you, if I can zoom out here. So you hopped out at the bottom there, 1 to 7.69. So that's pretty incredible. And you can actually see that this happens a lot of the time in the market. Because what we have here is another area of horizontal movement, that consolidation. And look what happens here. Got a retest. Comes all the way down, shoots up, literally touches this line, then breaks underneath, shoots up, closes on this line, basically starting there, and then just falls all the way down. And again, if you'd hopped on this candlestick and you would have said to yourself, let's go into a short position, let's put it halfway because we like a risk in this example, and we'll aim for a 1 to 3 as a bare minimum. That's 3.5, but whatever. We make that. And that continues to fall down. So if we have that little wick just trying to push up, but it just can't do anything, and it starts to fall, and you get this big candlestick, that's completely fine as well. So that's what I'm looking for in terms of breakout retest strategy. Hopefully that made sense to you guys. It's all good. But if you have any questions, please put it in the comments section, and I'm sure we can get back to you. Until then, guys, stay safe and have a great day. Bye.